Monday, the 12th of August, and we're taking a look at crypto ahead of the US Open. It's a much calmer start to this week than it was to last week after the carry trade shakeout. However, not much data going on, not much to push the markets in crypto land, but in legacy markets, this is a big week for data. There's US inflation data. Tomorrow PPI, Wednesday is CPI. The difference between the two, because sometimes they don't move the same direction. The relationship between PPI is quite focused on goods prices received by producers, and it's quite broad. Whereas CPI is just prices paid by consumers for a fixed basket of goods and services. The biggest difference between the two is CPI includes imports, whereas PPI doesn't. So you could have an instance where inflation is quite low in the United States, but a lot of imported inflation still, and so on. So that is the difference between the two. I'm not sure that inflation at the moment is the biggest story in the markets. Really US election uncertainty, 2-3 wars, at least 2 wars going on, maybe 3 in the brewing, means although the markets are a little bit calmer, there is still quite a lot of stuff out there that can upend stuff. And we've seen how very little small moves, a quarter basis point move in the yen and a promise to do more, completely freaked the market. And that's the story of crowded trades, basically. And I'm not entirely sure that fight is over. So we need to be careful. One thing that causes me, I look at the price action and I get quite excited about how Bitcoin really has made really nice corrective moves since March. And it's really tempting to just jump back in for that kind of post-halving next swing higher. But seasonally, over the last 14 years, there are 2 months in the calendar that are not usually bullish for Bitcoin. They're red months. One of them is August, which is not the worst month, which is September. And so I'm still a little bit cautious that we could have some more nasty upsets or surprises before, we can see this next swing higher. So we'll talk about the technicals for that. But yeah, in terms of this week, this is a pretty quiet start to the week. Japan was closed last night for a bank holiday, so there really wasn't any kind of Japan news. There isn't nothing on the calendar really today to be a big market mover, or that all starts tomorrow. There's quite a lot of European data this week, UK unemployment. We've got the Bank of New Zealand. They are forecast to hold at 5.5%. No change there. Employment in Australia as well as the UK, I think, UK GDP. So there's quite a lot of news out there. In terms of the cycle for the bigger market, this is the week before options expiration, which is next week. And quite often this is a little bit of a dip in stock indexes, and if we see a bounce, it's more like, for me, I feel like it's more likely next week than this week. But Monday and the start of the week is always usually the most optimistic day. So let's go back to crypto. Let's talk about Bitcoin. And this is spot Bitcoin. The main difference between this spot Bitcoin chart and the Bitcoin futures chart, which strikes out to me, is that in Bitcoin futures, we are riding above the 200-day moving average, which is a really big deal, support and resistance for Bitcoin. And in Bitcoin spot, we are underneath it, and that's where we banged our head last week. So what does that mean? Well, for me, as a trend trader and who uses moving averages, whenever you're trading counter trend, so the 200-day moving average, first of all, is king of the chart. Where you are in relation to that on any time frame tells you whether you're in an uptrend or a downtrend. Doesn't mean you can't trade to it, but if you trade counter trend, so as we did last week with this bounce at the beginning of August, your first target is back to those moving averages, those big moving averages. So that's exactly what we did with our first bounce last week. And in spot Bitcoin, unless we can get back above these moving averages, then we are not technically in an uptrend yet. We've bounced very nicely. What I like about the level where we got rejected last week is it's very clear from the high we made in March to the low that we made in that nasty shakeout, we bounced 50%. So when you think you have a big ABC, you put your fibs over, retrace levels over both swings. And so this 61,400 in spot Bitcoin is where all of these moving averages are bunched up, and that's the 50% retrace level. Now, I caution about being excited about us going up here. It's for another number of reasons. Normally, if you reverse at a 50% retrace level, mean reverting markets tend to keep mean reverting, and you usually pull back 50% the other way. So if we measure where 50% back was the other way, in Bitcoin it's down here at 56,000. And the same as this swing low here that we made at the beginning of July. And so it's possible that we do a bigger choppy correction, you know, we do something like, so we've done 3 waves down, we're bouncing very nicely from a measured move, but we might do something like this, 3 waves up, and then another 3 waves down to this 56,000 level before we bottom this week. If I'm wrong though, and if this is the pullback over and we're going to see another leg higher from here, then we're going to see a really nice close above this 56, sorry, not the 56,000, it's the 50% retrace from this high to low. So a close above that says that then we're above all of these daily moving averages, and then we're on our way back to the top of the channel. So if we draw our channel in, put this highs to lows, something like this. Sometimes you have to fiddle with them for best fit. So if we draw this as a kind of parallel channel here in Bitcoin and we close above 61,400, I think we're headed back to these highs and top of the channel around 69,000-70,000. But this is then key, 61,500 basically. If you're looking at the futures, quite a lot of people trade it as the futures, we see this same way. Let's tidy up this chart. Take all these ones we don't need off. So this 50% level in the futures is 61,915, and that's also where the daily 20 moving average is. If we can hold and close above that and this pivot level in the middle, we're going to keep going higher, and if we don't, we're likely to do a 50% retrace and retest this daily 200 moving average in Bitcoin futures. So I really don't, you know, I know I say it a lot, don't diddle in the middle. I'm not going to buy this here unless I get a really strong buy signal. On the 4-hour, potentially it's setting up, but I'm going to be a little bit cautious. So let's go back to spot Bitcoin and talk about the rules for this. So for me, you know, this has made a very nice textbook equal measured move 3-wave correction over the weekend. We're looking at this chart because we can see all of the weekend price action, and here's our lovely equal measured move. And when you do that, the 61 point back test of the 61.8, which is 60,000 that everyone's talking about. It's actually 59,900, but 60,000 then is key resistance. If we get above 60 and can hold above 60,000 in US trading, we're likely to retest this 61,500 level, and above it we're going up. So short-term resistance for US trading really is this 60,000 level, to see if we can then retest the weekend highs and continue higher. That's how I'm looking at Bitcoin. I'm just, because of this nasty channel, because we're in the middle, you know, that don't diddle in the middle thing is kind of quite a thing. And remember, you know, people who got shaken out on this bounce and didn't buy it quickly back when it bounced will have bought it quite recently and will get shaken out. You know, 90% of people in Bitcoin who hold Bitcoin aren't trading it at all. They're hodling it, them like they're the Michael Saylor, and everybody else. And the reason why I think that the futures and these ETFs are so important is because the 10% that are still trading, quite a lot of them are in those products, and that's why it's a really good idea to keep a look at the futures and where we are, as well as spot Bitcoin. Okay, let's take a look at ETH, because we've had a really nice bounce in ETH. So let's talk about what we've done here. From the low last Monday, which was really ugly, we had a very nice three-wave measured move higher. And here we've done a really nice consolidation around these hourly moving averages. Was this just a correction and we're going to continue higher from here? Or we could argue this is a little bit of a channel like this. To me, this actually looks a little bit more bullish than Bitcoin. I kind of like how we're holding up with these 4-hour moving averages. And in terms of the fib levels, let's go to the daily. This wasn't a 50% pullback in ETH. If we look at it on the weekly, this was one of those big 61.8 levels. So from the low in June 2022 to the high in March 2024, we bounced from a 61.8 fib level, and we put regular candles on, and we are holding above the 50%, which is kind of normally the middle of that range. Between the 61.8 and 38.2 is quite a big, the golden ratio zone. It's where you often see a lot of consolidation and sideways moves. Holding above this 50% level in ETH then at 2,485 points to 2,864 next, and this 2,485 is pretty important support. The problem is, we can see this as soon as we look at it, we've got this really nasty weekly 50 moving average. That's our highs. So that's what we've got to hold above to get to 2,800. And it could be, you know, underneath these big moving averages, sometimes you get a little bit stuck and you go sideways. Underneath you can see here when we tried to bottom, we spent, what, 6-8 days underneath this 50 moving average before we could recover it and continue higher. We could see a little bit of the same. So we know that last week's high in Bitcoin, in ETH, sorry, is a really important resistance level with that daily 50 moving average. And again, sometimes, you know, so I know I say this. So if we're getting an uptrend, sometimes you see a very nice three-wave correction, you just carry on, right? But when you do that, this little thing in the middle has got to be 3, like that, right? I think it looks good here, but sometimes what you see is, so you have your big swing higher, and then this is a funky sideways 3 waves in the middle, and we do one more swing lower. So until we actually break out of this sideways range in ETH, although we've had a really great week, Sunday, Monday bounce here out of this sideways range, we're really not going up until we break out of it. And there is a risk that we could do one small swing lower. And remember that really important level, if you're looking where to buy here, 2,485 in ETH. That's what I'm looking at. Now, some of the other markets, I think, you know, I'm wondering, is Solana and Ripple getting really good bids because people are going to think that they're the next ETFs? Solana has done very similar to Bitcoin. So I think we made, if we look at the big high to low of this big swing that we're in, kind of bounce to the 50% in the middle. Sometimes when you're going to do 3 waves like this, if you put it over both swing. So we've kind of done 50% up, 50% back. It's not very clearly defined here. What I don't like is how on the daily we closed underneath this 200 moving average, and it's all got very messy. And one thing, you know, I know I say this all the time about big down move candles. So we had a big down move candle yesterday in Solana, and 50% back of this candle therefore is resistance, and so is this 200 moving average. So just like ETH with that big daily 50 moving average resistance, Solana has the same here. So we would need to close above that. That is 148.16. I think if we can get above 148.16, we've got a wobble in the middle here around 154. But we could argue that we are in the next swing higher and on our way to retest the highs at 163, and then hopefully next swing higher. So we're not quite out of the woods. If we look at the 4 hour or the daily, you know, you can see these are going to be quite bumpy resistance levels to break through in Solana. Same in Ripple, which is one of those charts which have had some really nice moves. So what's going on here? So if we look at this from the high in July a year ago, we've been in this tighter and tighter range in this big wedge. Have we broken out yet? No, we haven't. We had a really nasty reversal and couldn't. This is why this is a little bit like ETH. It looks really bullish here, doesn't it? Just watch out that we really do break out of those sideways range to be going higher, because we're still stuck in the middle. Now, I kind of like Ripple a little bit better because we're holding above this 200-day moving average, and technically, let's go down a couple of, technically here on the forehead, doesn't this look like a very nice three-wave correction? Now, it's to be going up to challenge the highs again, back test to that. Let's see if we can get, it's not quite there for me yet. Let's try Fib retrace levels. One of the rules I have, right, when you see a T3, when you see a nice equal measured move like this, so 1, 2, 3, if you get above the 236 fib here, which we have, and if we can push through this 4-hour moving average, the most common retrace of a nice three-wave move like this is the 786 fib level retrace. That's the most common. So I think we could say here we could have a little bit of a wobble at 0.5594, but really if we keep pushing higher, 0.622 is the key decider. That's that extended trend line. It's that big 786 fib level. I think if we push above that, we could start, and then hold a breakout, we could start talking about Ripple breaking out of this long-term consolidation range. So for me, 0.622 today in Ripple, if we squeeze higher, it's going to be the level that I'm watching to see if it can keep going. If we don't, does it mean doom and the world's ending? No, it just means we're still stuck in this really nasty sideways range. Not everything looks horrible. Let's talk about this total 3 is the crypto market cap excluding Bitcoin and Ethereum. So basically it's the alt market. And again, I spoke before about how I really like this pattern, and we could argue this is quite similar to what Bitcoin has done in this correction. So we had a very nice three-wave correction in Bitcoin, didn't we? And then we had the really nasty shakeout that retested these lows with a false breakdown on the weekly. So on the weekly, this is actually, especially in this a pullback to these weekly moving averages, it's setting up really nicely and bullishly. The problem is that we are not out of the weeds until we break out from this, consolidation channel, if you like, or corrective channel that we're in. And we need to hold above these weekly moving averages. And if we I need to draw as a parallel channel. So there is, let's draw it like this. There is, kind of room to go higher. If we think this is an ABC followed by a swing failure kind of double bottom pattern here in this market, look, we can see this was a very nice textbook equal measured move that we tested here. When you draw an equal measured move, which we've done, the back test of the 61.8 fib is the key support and resistance, and that's at 577 in this. Above 577, just like Bitcoin, if our first target will then be a test of the top of this channel, which we should really draw a bit more like this. And because we think this is the most likely retrace would be a 786, which would put us up here, and so on. So this is pretty key resistance. Last week's high in the altcoin crypto total 3 chart is last week's high. Above that, we should see some really nice moves across the board in altcoins, not just, the pump and dumps and the RTRs of this world. So that's what I'm looking at. And if we look left, we can see it in this total 3 chart. This is really important support and resistance as well. So that's quite common across the board. And again, it's midsummer. There's a lot going on. we could get a little bit choppy here before we can make that break. But that's what I'm going to be watching for today.